Hey, Job here. On this channel, I invest 100% of my income and live out of my Robinhood brokerage account. I've been doing this since the end of May 2025, and today we'll be going over the week 51 portfolio update since I started this strategy. The idea is that this should hopefully bring me to an earlier retirement at 40 years old in 4 years from now that I'm 36 years old. It's a very aggressive strategy, but after almost a year running it in a couple of weeks, it's yielding some very promising results so far. I'll go into all the details of my performance, breaking down my slight loss this week. I was red for the first time in a few weeks and down 1.24%. And I'll also go over my margin health, all my dividends received, and overall portfolio thoughts that I'm thinking this week. Also, you may have noticed that last week I didn't post my usual paycheck investing video, and instead I just posted a breakdown of my new routine. That was actually a pre-scheduled video as I was away on vacation last week. I just got back late last night, and yeah, me and my fiance, we spent a week in Hawaii and Kauai, and we had a really relaxing time. Kauai has kind of quickly become probably my favorite island so far between Maui, Oahu, and Kauai that I've been to so far. Just have the big island left to go see. So probably in another 2 years. We try to go to Hawaii like every other year, essentially, in between bigger trips. And yeah, it just feels so much chiller there on Kauai out of all of them, and which is really what I want on a vacation. We had plenty of good food, relaxing time in the water, and a lot of fun adventures as well. And yeah, you guessed it, how this links back to the portfolio. All this was paid for from my portfolio on margin. And that's one thing I enjoy with the strategy is that I'm not having to sacrifice good times and live super frugally now to retire early. Like I'm still kind of leading the normal life that I like while also still investing 100% of my income and building that cash flow, right? So I was thinking that like instead of doing the usual financial of the week, which honestly I didn't have time to watch any videos, I was actually just properly relaxing this week. I figured I could kind of break down all the costs from that trip in Monarch and yeah, just kind of see how that all factored in and how much that all costs, all said and done. And yeah, all that said, as usual, you'll get radical transparency on my channel, whether the market is up or down, and you'll see all my real numbers and see exactly how much skin I have in the game for any given position. If you appreciate all that transparency, give a like and subscribe. As usual, just a quick disclaimer, this video is for entertainment and education purposes only. I'm not a financial advisor, and nothing here should be taken as financial investment or tax advice. I'm simply sharing my personal investing journey and documenting my own results. Make sure you take a close look at this disclaimer here. As far as a strategy recap, yeah, as a refresher, this is the rough chart that I use to invest all my income week in, week out. If you want a full breakdown of it, check out the video at the link at the top right. I'm not going to go over this since I have that detailed video now. And let's just dive in. So if we pop over to Robinhood, we can kind of see. So yeah, ended the day red on Friday, was down 6.6K or 2.96%. So that, and after with a little bump in the after hours, but I'm sitting at 218.4K in the portfolio. You can see this is my full live portfolio. You see all my positions here, my buying power, all my margin, nothing's hidden here. And yeah, and if we check for the rest of the week, so we can kind of see here. So it's down 1.23% on the week or down 2.7K. So the first red week in, yeah, the last several weeks, really. It was a crazy big run up on the green. But honestly, this kind of excited about this. This will hopefully make for some good buying opportunities next week. And yeah, we've just been going greens for so long that like we need some breathing room, I feel, right? But on the month, still green, up 13.04% or 25.1K. So quite a bit. You can kind of really see that run up, right? The 3 months still positive as well. Kind of see how that run up started from the end of March up until now. It's just been a crazy run here. So up 42.7K or 24.34%. Year to date, very green as well, up 35K or 19.14%. On the year, let's just go to all since we're getting close to the year there, up 42.2K or 23.95%. So yeah, just this crazy run up and just really a small dip in the grand scheme of things, right? So yeah, we'll be excited to buy this little bit of this dip next week with the paycheck. If we pop over to my investment sheet to kind of dive into this number and how deep this all goes. So if we add up all my positions in the portfolio, right? So across growth, all these positions and all my high yield, I'm sitting at a gross value of 392.4K. I just touched over the 400K mark at one point before we had that dip on Friday. I was hoping I could make that video today with the 400K, but didn't quite happen. Maybe next week if it ends up being a green week along with my investments. Margin used, I'm sitting at 174.6K, and which gives me a net value of 217.8K. So this was at end of day Friday, and then 218 here includes some of the after hours gains that happened after Friday. And really, despite that dip and the very red day on Friday, still holding on strong in total returns and unrealized gains side as far as the green. So mostly green in the total returns column, or still in the red here. So we'll probably still buying this dip, right? BCAT is a brand new position in the portfolio, and we'll go over that a little later. But that's in the red because of a totally fresh position, right? But we'll be DCAing into this over the next few months. GIAX in the green now, so that's nice to see a lot after the ROC. Alti is kind of getting close as well too, which is crazy to see for both GIAX and Alti, despite the crazy high yields they're doling out. And then everything else in the anchors are sitting nice and green. There was a little pullback from KCOP this week, so we'll probably maybe buy a bit of that dip next week potentially as well. And BTCI still in the red here, but slowly climbing out of there. So yeah, with all that, you can kind of see that my total profit, so this includes realized gains, dividends received, and all that on margin, I'm sitting at a 84.8K gain, or 38.98%. And on the unrealized side, if you couple them with the realized gains losses that I had from last year and earlier this year, I'm sitting at 16.4K gain, or 7.57%. So still pretty green overall on both sides of the portfolio, which is great to see. I like tracking both of them. If we pop over to the growth and high yield income split, you can kind of see that this 392.4K is made up of 192.7K of growth, so a little over 49%. And on the high yield income side, I'm sitting at just under 200,000 at 199.7K, or a little above 50%. So again, my high yield income now will just be higher than the growth side, unless there's like some crazy run up in growth, just because I'm putting like 90% of my salary into high yield income now, just to kind of really accelerate the paycheck replacement, really, just to get to that as quick as I can. If we check in on my margin health this week, things are feeling pretty healthy overall. I'm sitting at a 55.5% equity. If you go over the gross portfolio value, which we went over, margin used, net portfolio value, all the same numbers. If we take your gross portfolio value and multiply that by the blended margin maintenance ratio of all my positions, so that's 25% across the board, you get this margin maintenance dollar value of a 98.1K. So really, my portfolio value would have to drop to this amount before a margin call gets triggered, right? So if you take that and minus that out to the net portfolio value, you get a buffer of 119.6K. So this is getting healthier and healthier. So the portfolio would have to drop by this amount to basically, whether that's on the net portfolio value or on the gross portfolio value, to like hit that margin maintenance number. So if we take this margin buffer number and divide that by the net portfolio value, you get the 54.95% margin buffer. So this feels like healthy when you look at it, right? But like I said, like this is what Robinhood uses, right? What you'll see here in the margin buffer is close to that essentially. But personally, I don't like going off of this just because it makes you feel safer than you are. You're just like, 54% drop won't happen, right? But what's important to note is that this margin buffer number is that if that happens on the gross portfolio value, which is easier to happen to percentage-wise, that's the equivalent of a 54% drop on your net portfolio value. So if you take this number and divide that by the gross portfolio value, you see that you get like a 30.50% percentage here. And really that means that like if this gross portfolio value, so all the positions here, right, drop 30%, then you'd be in a margin call. So but because of the margin amplification, this 30% drop on the gross portfolio value is actually the equivalent of a 54% drop on this portfolio. So yeah, I like keeping this one into account, and this is 30%. So it's getting better and better. I want to get this as high as I can, right? To really insulate me from any crazy market drops, right? But yeah, that's where that's sitting. And as far as my margin buying power, this has slightly ticked up this week. So if you take your margin total, minus out your margin used, you get your margin buying power. So I'm sitting at 90.5K. So this is money I could technically use to just buy up more stock, right? Up to that amount. But I want to keep this margin buffer high, as I mentioned. And if you take half this amount, that's 45.2K, and that's actually cash available for withdrawal. So you could either invest 90.5K or take out 45.2K of cash. And then this would basically deplete this number, right? If I fully took this out. So it kind of gives me options, and it gives me a nice buffer. So I just want to keep growing these. You should kind of just see these growing month to month, essentially. That's the idea. And then if we check in on my monthly dividend estimates, so yeah, it's looking like on average. So what I do for my dividends, right? I mentioned this in the other video, but anything that's paid monthly, I go on a trailing 3-month average to get the average dividend. And then also for anything that's weekly, I go on a trailing 4-week average just to kind of get a rough idea. So it's a little bit of different from Snowball Analytics calculation, which just takes the last payment and projects it out. This kind of just gives me a rougher idea of like what my monthly dividend estimate will be. So it's a little bit more stable in that sense, right? So I'm sitting at $4,888 of monthly income that comes in from the portfolio roughly. And it's just an estimate, right? But yeah, which is pretty good. So like if you take this amount and divide that by just what's the high yield income assets in the portfolio, so the 199K, that's actually a 29.37% yield, which is pretty good. If you go off the full portfolio taxable value, that's actually a 15.59% yield roughly. So yeah, just nice to kind of keep track of this just to know exactly how much the high yield portion of the portfolio is yielding, right? Since I have like more than at least half of the portfolio that's in growth. But at the end of the day, like, so I have the margin balance that I have, right? So quite a bit, 174.6K. So I'm paying roughly $651 of interest on that a month, right? But for that, all that leverage I'm taking out, I'm actually generating 4.8K a month. So there's a good spread here of $4,200 that I'm making in positive cash flow from that leverage, which is super exciting. But yeah, I'd say for me, I personally find that's a good deal for how my setup works. And yeah, and that's the numbers here on the sheet here. If we pop over to Snowball and kind of take a deeper dive on the categories. So I like to break it down a little bit more here just to kind of show the different facets of the portfolio here. So as far as the ultra yielders, so anything yielding 20, 30% plus, this is actually in the positive right now. So definitely negative in the capital gain and realized P&L, but really positive in the dividends received. A lot of that is on the back of Chippy right now, which has had like a crazy run up in the last few weeks. So that's up 31.5%. And then you'll notice that the YMAX and Ulti number is a little bit different from my sheet here, like I mentioned the other week. And that's because it doesn't get the updated cost basis for some reason from Robinhood. And this is factored in here. So that because of the ROC that happened last year. So yeah, like YMAX should be green here technically, right? So yeah, you can kind of pay more attention to that on the sheet. As far as the high yield anchors, these are very in the green. So up both in capital gains and dividends received. So this kind of proves that like, yeah, the anchors are holding well on their own, right? And they're having minimal, if any, NAV erosion. It's still having some capital appreciation plus dividends received. So that's why this year I'm really focusing on these 10 to 20% yielders, right? So XPay, TSPY, TDAX, SPY, QQQI, LPI, KCOP, and BCAT, which is new this week. And we'll dive into that later. And yeah, so all pretty in the green here, and a lot of it through XPay over here, up 30.79%, which is doing great. Hedges, all in the green here, up 4.78%. The only thing kind of holding it back right now is ORR, which I'm still investing in its dip here. You can kind of see that, like, yeah, just buying in its dip channel here, and hopefully we'll eventually recover once the Iran conflict resolves itself. We'll see. And yeah, and then my growth and dividend growth anchor ETFs, this very in the green, up 28.79% or 35.2K. And yeah, everything is double digit in the green here. You can kind of really see, right? From VOO, VGT, SPMO, SCHD, QQQM. Great anchors to the portfolio and uncapped growth that I'm getting over half my portfolio. So I think I'm really liking this hybrid approach to things, right? So kind of stacking growth and income. And if we pop over to the growth side of things to just kind of check how we did against the S&P 500 this week. So the numbers are a little bit off, like, because remember in Robinhood it said I was down 1.24%. So this is showing a little bit higher for some reason. But still gives you the idea, right? Overall, I was down on the S&P 500 this week. So this one, they say I'm 0.65%, 7% down or 1.4K. But like, yeah, what Robinhood says here, I think is more accurate since this is my actual numbers there. So yeah, not sure what's the discrepancy there, but yeah, I was down on the S&P this week overall. So you can kind of see that. So first down week in the last little while too, right? Yeah, you can kind of see just this little dip here, but the overall still very positive, right? Still beating the S&P handily on the month, on the 3 months, on the 6 months, and yeah, year to date, you kind of just see how the portfolio's fluctuated. It was beating it, then not performing against it really well until that big run up we've had over the last several weeks here. And yeah, the margin amplification has really helped. You can see how the margin amplification helps on both sides, right? Yeah, it really didn't help during the downturn, but it's helping a lot with the successive green days that we've had. So overall, looking like I'm up 9.62% or 35.7K against the S&P, and the S&P's up 8.4% in that same time frame year to date. And if we check on my heat map here, so yeah, you can kind of see that it's been definitely mostly red, a mix of red and green here this week. And you can kind of see what's been held up well. So MLPI is up well. So that kind of indicates to me that, like, yeah, just with stuff going on in Iran, like the price of oil spiked, right? So this is spiking along with it, or still reeling from the conflict overall. So even despite that oil shooting up, it seems like ore still lagged behind a bit. SCHD holding up well overall. To be down a little bit and almost 1%. Yeah, VU just slightly in the positive here, as we mentioned. VGT in the positive. I can kind of see that T-SPY actually outperform VU, which was cool to see, and even SPY-I. So even some weeks that they can outperform it. If we compare it to QQQ, we can kind of see, yeah, QQQI actually outperformed QQQM, which is cool to see. What about TDAC? TDAC actually down a lot more than QQQM. So yeah, you can kind of get at a glance how things are looking, right? Yeah, love looking at this heat map and kind of really seeing what got hit hardest or whatnot. On the month, you can kind of see stuff is still pretty green, right? Yeah, so BCAT might still be a good buying opportunity. Gold potentially. KCOP was down quite a bit. So you really see this kind of helps kind of guide a little bit of my investing week to week to see what's still down, right? So BTCR might be still good, or RSL might still be good. BCAT, KCOP and gold might be good as well. So yeah, love the heat map here. If we pop over to the dividend calendar, kind of see this week what we got paid. So we had a big 1.6K week. So got paid $427 from Chippy at 46.9%. Got paid $74 from KCOP, my very first dividend, 15.16%. Got paid from Ulti at $210 at 66.8%. Got a big payment from XPay at $806 at 20.83%, and then YMAX as well at $145 and 57.23%. So yeah, nice week this week. It's gonna be another nice one this week between my monthlies getting paid out and then also my weeklies. And yeah, and as a reminder too, as an experiment that I'm doing for May, so anytime I get paid my weekly dividends over here, I'm actually reinvesting these in the portfolio. And then the monthlies, I'm just letting those deposit to margin and cash to kind of help keep the margin balance under control. Just an experiment I want to run this week to just kind of see how the numbers fluctuate, really. May not do this long term, but I'm hoping this could kind of help accelerate replacing my monthly salary, right? If we pop over to dividend page to kind of see how things are looking as far as yield on cost. So yeah, right now my yield for the full portfolio is like 16.68% according to Snowball, or a 17.93% yield on cost. You can kind of see that Ulti, YMAX, BTCI have all kind of eroded in dividend yield for the capital that I have invested into it, right? Because of its capital gains being in the red. So really, every week I'm getting 66%, but in reality, for all the capital I have invested into it, it's actually more like a 42% yield. Same for YMAX, 57% on the week, but 36% on all the capital I have invested. And BTCI kind of climbing a little bit back up as I've been investing into the dips, right? But 25% on the month, and then 19% really for all the capital I've invested. Chippy is actually in full yield on cost is going higher because it's gone up so much. But you can kind of see the core here, right? XPay, BCAT, KCOP, TDAC, MLPI, TSPY, QQQI, IAUI, SPY-I. That's a mouthful. But these are the anchors of the portfolio, right? And you kind of see that these are holding steady, right? In both yield and NAV. So that's why I'm kind of really focusing on this middle section of the portfolio as far as investments this year. Just because, yeah, I just don't want to have as much of this NAV erosion and yield erosion that I had in Ulti and YMAX. But I'll still be keeping those and still be reinvesting their dividends, right? And yeah, and that's how that stuff's looking. And you can kind of really see dividends received on the year. And yeah, kind of year on year. I'm definitely on track to beat my May from last year, which is cool. Yeah, they're tracking towards potentially 4.9K this month. We'll see. That depends on if the weeklies hold up or not. But yeah, see how that ends up by the end of the month. And it's exciting too. The end of this month will actually be a year since I've been running this strategy. So we'll be going over all the details of that and the monthly update. It'll be a special one. And then as far as to updates related to the portfolio, if we pop over to Discord, yeah, so you'll have noticed if you're on Discord, and the Discord's free, by the way, if you want to join. The links are in the description below. I made a new buy into the portfolio, BCAT, right? So you saw that I was doing some small buys with cash back and also with my Chippy, YMAX, and Ulti dividends this week, as well as my full Paycheck. So yeah, I post all my trade alerts here for any cash back buys, Paycheck buys, so you get an early heads up ahead of the videos coming out. And yeah, and BCAT's an interesting one. So yeah, shout out to Foxhound who put it on the radar. He's on the Discord here. He's good about like kind of finding funds that we like typically don't look at too much. And BCAT was a nice one that he's found. So this is not an ETF, it's a CEF from BlackRock. And BlackRock I like. Obviously it's like a really big player in the financial products industry, an investment industry. So I used to hold BST, which was from them previously, and that was kind of like my taster a little bit as far as covered call ETFs and kind of getting income from tech. That was getting like 8% at the time, which at the time, because I was in dividend investing, that was huge. Now that's small fries. But yeah, and my BST position actually lives on through XPay, right? Because I went from BST to CRF and then XPay when I switched over to Robinhood. So yeah, it's kind of nice to kind of come back to them. Obviously, they have a great track record being a giant investment firm, but they have this 20 yielding percent ETF, and it's interesting because it's a mix of equities, fixed income debt, essentially, that they hold with different companies, so they get interest payments, and you can kind of see how it's split, right? So like roughly a little less than 60% of their portfolio is equities, which they also write covered calls on and options to generate extra income, and then plus the income from the fixed income, and that's what makes up their 20% managed yield, roughly. And what's interesting with this is that it's just kind of an alternative to XPay. So I'm pretty heavy into XPay, as you've seen, obviously, right? So yeah, 48K into it. So quite a bit of my portfolio, that's like, what's the allocation here? Yeah, 12.24%. So I was looking for another 20%er that could kind of complement it and just buy on dips as well too. Just so I'm not all heavy on XPay. And this one was an interesting one. Yeah, if we check ChatGPT, I ran a fact sheet through it just to kind of get the rough idea, right? So like I said, it's large cap equities, bonds, credit, private debt, mortgage-backed securities, and then the covered call rating on top of it. So 20% yield, and it doesn't actually use any leverage when you check on their thing, right? So a lot of CFs do use leverage to kind of juice their yields, but this one doesn't, which is nice. And it was the same for BST actually. And you can kind of see their portfolio composition with all they have. And also what's nice too is that it seems like a lot of it is actually ROC, or a good chunk of their dividend too. So that's nice and tax efficient as well too. So I think it's going to be a nice complement to the portfolio. Yeah, you can see the ROC here. And yeah, you'll notice too that it does have like a little bit of a dip. Let's see if we can kind of get the chart here. So when it first started, so it basically got that big dip in 2022 from the tech downturn, and then also just with the interest rate hikes, it really hit it hard. It kind of hit it on both sides, from the tech side of it, their exposure, and then also like all the private credit that they had. But since then, it's actually been holding up pretty well and has stayed like steady. So there's been some NAV appreciation, but also paying out a 20% dividend. So this is the part that's really interests me here. And if we really check on the Testful.io here, so I kind of ran BCAT against XPay, and you can kind of see, so this is without total returns too, by the way. You can kind of see that BCAT is holding up pretty steadily against everyone, really. So XPay is here in red, so you can kind of see that had I been holding it since that same time period, would actually be up ahead with BCAT, plus getting that 20% yield. And these other ones, we'll get into these after, but these are other funds I'm looking at potentially. So yeah, BCAT, great one portfolio. Excited to kind of keep investing more into it. Has a 1.5 billion in assets under management. Has a 1.25% management fee, and if you include like interest expense and stuff like that, that's gross expense of 1.42%. So this is after its yield, right? So you get a 20% yield, and that's already been taken out with their management fee. So yeah, definitely high compared to like a more passive thing, but because it's so active, that's why it's higher. And yeah, that's BCAT. Excited to kind of keep investing into it as a new position in the portfolio. Yeah, you'll see me kind of going some income towards this in the next few weeks. As far as other positions I've been looking at and considering, so you kind of saw that in Testful.io here. So there's GIAX, BLOX, and KYLD. So I've been wanting to potentially get into X funds. I've been kind of just watching them from a distance and kind of seeing how they've been doing. And a couple of funds caught my eye. So GIAX was interesting. At first, I thought it was really just an international equity one, but it's actually a mix of international and then also US-centric ETFs, which is cool. And it actually holds the ETFs and generates premium from those. So there's a good chunk that isn't international, so like 9%, or actually not even 17%. And so, yeah, but also it does have like small cap, and then, yeah, the S&P 500 itself, mid cap, and also some single stock names that it generates premiums from. So it's a very interesting mix of a portfolio that they have here. It's a pretty good dividend yield at like 24% distribution rate, and it's paid weekly. But yeah, that's maybe one I'll be considering. BLOX is another one where I've been keeping an eye on this for a while. But I do like that it kind of gives a little bit more diversification within the crypto industry and related industries. So it obviously holds Bitcoin and Ether related positions, but also it does hold like things like Nvidia, which kind of contributes to the crypto industry, to Robinhood, which is a big player as well overall. So you can kind of see that it holds Bitcoin here, Ethereum, and just generates options premium on top of those. And yeah, and what's nice between GIAX and BLOX too is that potentially, like with how they structure their options, it potentially could be like uncapped growth, which is cool. So yeah, I might be considering this. I think this might be a good complement to BTCI, which I already have, and it has like a weekly distribution rate of 36%. So yeah, all of these would basically go into the ultra yielders, right? So the 20 to 30% plus, they would fall in that bucket. And KYLD is another one I was considering from Curve. So this is kind of like their almost version of Alti, but better run in that like it has like a lower dividend yield, and they kind of try to do a better job of like protecting against downturns and better upside participation and better tax efficiency. And what's nice too is that they're not afraid to kind of cut the distributions if they need to kind of just like better control NAV with like the market having a downturn or whatnot. So for example, you can kind of see here, they cut their dividend around when the Iran war broke out, right? And they're going to keep it that way as long as depending on the premiums that they're generating. So it seems like Howard Chan and Curve try to do a good job about that generally across all their ETFs. So they try to bank money that kind of helps smooth out the dividends, which is cool. I definitely have watched a couple of his interviews now and definitely like how he approaches things there. But yeah, those are the ones I'm considering for the portfolio. You may or may not see me invest in these in the next few weeks, next few months. But yeah, generally I kind of keep an eye on stuff, research them appropriately, right? Between ChatGPT and doing my own research, for example, or Gemini or whatnot. But yeah, that's stuff I'm keeping an eye on. And then as the last thing, as far as vacation costs, so let's just pop over to Monarch here. So we can kind of see here. So this is the cash flow so far, month to date. You can kind of see here. So you see a lot of categories here in travel that have popped up, right? So you can kind of see that this month so far, I've spent 1.9K in travel for all my vacation stuff. And yeah, and if we go and isolate all these costs really, so there's the cost from this month, and then also when I bought the tickets and hotel and all that. So let's just filter that. All right, so I've filtered out basically just all my vacation costs. I basically added a tag for it in my transactions. And yeah, so all in, my vacation cost 3.4K or $3,459. So that's across hotel, rental car, and all the spending we did for food, activities, and things like that. And what's nice is that my flights were basically free for this vacation, or free quote unquote, just because I used my Alaska Summit Visa air miles that have been accruing over the last few years. So yeah, that was paid for totally with miles for the flight. So that was nice. So saved myself several $100s there. And yeah, got a great package deal as well with Costco travel for hotel and rental car, which bundled, we stayed at the Royal Sonesta, which was really nice, resort hotel. I think that package itself was about 3K, and we split it between me and my fiance, so 1,500 each. And yeah, it was great. The hotel itself was amazing. Lots of great perks that came with it. $100 food and bev credit for the week. We had like $400 of Costco rewards cash back with that, like various discounts on the hotel, free parking, all that good stuff. The only pain point was budget. They had us at a budget rental car, and honestly, it's in the name. It's a budget. It was budget service and kind of budget car. Getting a car took forever. It took like hours when we first got to Kauai, which was a pain. So definitely worth paying for the little upgrade to Enterprise or other better companies that they have there. You're in and out a lot faster. And yeah, and then as far as spending on the week, you saw we had like 1.9K worth of food just for ourselves and others, activities. Yeah, when we go on vacation, we like eating out a lot, of course. Yeah, we went to good restaurants and more low-key restaurants, a mix of everything. And honestly, I think a lot of times all the low-key food is just so good in Hawaii, like poke, like just like low-key spots like Do Good, Loco Moco, things like that. So really had a good time and got a lot of good food. One of our favorite activities that we did some zip lining. We did this chocolate farm tour at Lidgate, and yeah, learned a lot about cacao and how chocolate is farmed and made. Honestly, I never realized really that chocolate came from a fruit. So that was cool to kind of learn about and actually taste what the cacao seeds taste like. So yeah, and I think through that I've become a fan of dark chocolate. I was never a huge fan before because it was very bitter, but turns out a lot has to do with how they process the seeds and how they make it. So theirs was like really not bitter at all. It was very fruity, a lot of depth and flavor to it. You could almost kind of compare it to like how wine tastes compared to different regions, right? So yeah, became a fan. We bought a lot of chocolate at the end. But yeah, and then I mean, like, how this links to the portfolio, as I mentioned, right? Like, all this was paid for on margin, right? Like, this basically just goes to my credit cards again, right? And I just pay those month to month, paid the statement off, and just paid that all from margin in the portfolio, right? So that's what's kind of racking up here with the margin used. So what's nice is that, like, really, I love that I'm not having to sacrifice and live frugally right now to retire early. In a weird way, I'm kind of having a cake and eating it too, right? All while investing 100% of my income and just kind of keep growing my gross portfolio value and also my net portfolio value. And yeah, it's really best of both worlds in that end, which I've been really enjoying personally for the strategy. So yeah, looking forward to more trips, and always nice to kind of reset. Honestly, at the beginning of the year with the layoff and all the stress there, it was nice to kind of just relax this week and really just kind of take it all in and enjoy. Didn't think about work all week, honestly, and was on and off in the channel in the comments, as you probably saw. But like, yeah, it was a nice relaxing time, and it was a nice reset to tackle the back half of the year. If you want to support the channel, as usual, just pop over to the description below. You can kind of see all the different links that I have here. And also shout out to all the new people that have joined the channel through my last portfolio update. Crossed 10,000 views, so shout out to everybody there. A lot of people that joined the Discord, a lot of comment activity, so it was great to kind of see that. That was a nice surprise. Haven't had a 10K video in a while. But yeah, if you want to keep supporting the channel, you can see my free Snowball portfolio link, my free portfolio spreadsheet tracker, the free Discord server, my Blossom social profile. If you want to support the channel monetarily, there's Patreon and the YouTube membership. There's also a free portion of the Patreon for, just watching the videos as well, just as a backup. If you want to keep supporting how transparent I am, just give a like and subscribe and hit the bell notification to be notified about a future video. Next video will be on Friday, as I mentioned, for my full paycheck investing video. And as I mentioned in my post the other week, my new schedule is going to be like so, right? So Fridays at 12 p.m. PST will be my full paycheck investing video. Sundays will be my weekly portfolio update. Today's coming a little bit late because of the vacation, but yeah, normally it'll be at 9 a.m. PST. And then when I have special videos, one-off videos, interviews, any routine breakdowns or things like that, strategy updates, I'll post those on Saturdays at 10 a.m. PST. So this is going to be the general flow that I'll be using. For that changes, I'll definitely let you know in YouTube posts. But peace. I'll catch you in the next one.